Hello everyone, this is Steve with the free Bullion investment guide. Today is January 18th. I'm doing a review and outlook price analysis video for gold. This is gold's 4-hour chart, and it's been 2 weeks since I posted a video for gold. When I last spoke to you, I took away the price patterns from the gold price chart. There weren't any patterns to show you at that time. What I left on was clearly the support and resistance lines, and they do have prices here. They're just a little bit out of the view of the screen. Anyways, so I took away all the lines because there weren't any patterns to show. The price of gold had moved up at the end of the year and was continuing to move up after the military escalation between US and Iran. The last I spoke to you, the price of gold still hadn't broken above the 1555 level. The 1555 level was resistance at that time. Since then, it has popped up above it. It popped up above it after Iran retaliated militarily, and the price of gold really spiked up. The traders really weren't quite sure what was going to happen, and what happened was a de-escalation of military actions between the U.S. and Iran. So the price of gold now has been in consolidation, which is what I stated in the last video, but I didn't think it was going to break above 1555. But clearly fundamentals always trump, no pun intended, but fundamentals always trump technical analysis. And and it did, and the price of gold spiked higher up to the 1615 level, which has been a resistance level in my price charts for a long time. So now we're getting the consolidation. Now the price of gold is in consolidation mode. And clearly what we're getting out of that consolidation mode is you could call it a falling wedge, or you could call it a bull flag, one or the other. But it's clearly, let me color this right real quick. So anyways, we got a falling wedge that have come out of the consolidation. Another reason for the consolidation is the signing of the phase 1 trade deal. So that has helped gold to consolidate over the past week or so. But again, I see gold continuing its rise. As far as will it break 1615, that's another story. Excuse the pop-ups. I really think something would have to, beyond what's in the news now, maybe another military escalation between Iran or somebody else, or perhaps there might be some fireworks coming out of the impeachment trial, or I can tell you, as far as economic indicators, this is it. This little bit is it next week. The 24th is Friday, and the 20th is Monday. I'm not sure if markets are closed, but they got nothing scheduled for Martin Luther King's birthday. And really nothing else will really affect the price of gold much out of any of these economic indicators that the market watch is showing. And as far as the Fed goes, they're still with their QE. They're still propping up the repo market. We don't have a meeting until the 28th and 29th, so that's not until the end of the month, about 10 days away. So that's why I would be surprised if we saw any spike out of gold in the near future. But as far as reason for it to continue to rise, I don't see any reason why that may not happen. The MACD on the 4-hour chart looks like it's in just above neutral territory. Same with the RSI is just above neutral territory. And on the daily chart, it does look like it's in oversold territory, but the histogram chart is telling us we're at neutral point on the MACD. And with the RSI, the relative strength index, we are just below overbought territory. So I mean, we may see some downward movement in the price of gold, but clearly, if anybody was looking at this chart with a technical eye, you could clearly see that this is a bull flag, and that we should see another move to the upside sometime in the week ahead. So that's it for this week's review and outlook. I thank you for your time. Take care, and God bless.